call on Tunde Ladipo to do what we call a FinTech demo session. Thereafter, we'll go through a panel discussion just talking about customer experience. And then quickly, we will have our global co-head of FinTech in KPMG to come and talk to us about how FinTech create value. And I think it's going to be an important session. And then thereafter, we'll also get Boye to come and show a FinTech demo session. And then we'll move quickly to have David Milligan to talk about adopting an effective framework for FinTech sourcing. Very quickly again, we will have a session that will be moderated by my colleague, Dapo Kubadejo, which will be looking at driving investment in the FinTech. And we've seen a lot of investment, especially even this year, 2016. And then we have a publication that will be launched by Kunle Lebute, the National Senior Partner for KPMG. And then we'll have a light launch, and then we'll come back, and then we'll see a lot of FinTech demos, and then there will be closing remarks by Joseph Tigbe. You all agree with me that it's a packed session, and we're going to try and do it very swiftly. Without much ado, I would now call on Ayo Othihiwa. Ayo Othihiwa is a partner and head of our financial service sector in KPMG. Can you please join me in welcoming Ayo Othihiwa?
Good morning once again. Let me start by saying it's a pleasure to see all of you here. Just looking at the audience, I'm amazed at the turnout. But I think it speaks to the fact that we are here for an important business. So, on behalf of the partners and staff of KPMG, I'd like to say once again, welcome to this inaugural KPMG FinTech Summit. This morning, we have in our midst participants from across leading FinTech companies, incubators, accelerators, banks, insurance companies, other financial institutions, private equity, venture capital firms, amongst other stakeholders. And what is the common thread for all of us? It is that we are all interested in knowing more about FinTechs. So who are FinTechs? What do they offer? Are they threats to existing financial services business models? Or do they offer opportunities to redefine how we serve customers and therefore present opportunities for collaboration? Ladies and gentlemen, this is why we are gathered here this morning. Technical disruptors, data and analytics, and other technological trends are redefining the way we serve and reach customers. The FinTechs in particular, defined as technology-based businesses that compete against or collaborate with financial institutions, are positioning themselves today to disrupt the sector far more radically than we can envisage at this time, thus making them subject of interest across the global financial services landscape. Similar to global trends, Nigeria is fast transitioning into a dynamic ecosystem offering FinTech startups a platform to innovate and to grow. The Nigerian economy, which is still predominantly cash-driven, with a relatively high population of unbanked and underbanked people, now has established and emerging FinTech players dotting our landscapes. Our understanding is that the emergence of FinTechs in Nigeria have largely been driven by two major factors: the surge in e-commerce and smartphone penetration. Not only that, we have seen increased technology capabilities, which has now created opportunities for technology entrepreneurs to rethink and challenge the way consumers currently access financial services. We are seeing an emergence with focus on payments, crowdfunding solutions, and more recently, a growing interest in insurance and blockchain. Ladies and gentlemen, it is our belief in KPMG that the FinTech revolution in Nigeria has the potential to grow at an enormous rate as the various players within the industry or ecosystem come together to orchestrate the much needed collaboration and partnership to drive the industry. Our prognosis is that the FinTech opportunities in Nigeria are significant and could potentially redefine the service landscape over the next few years. And that is the reason why we have put this summit together. We have carefully chosen the theme of this event as the Fintech Disruption, understanding the value proposition. That is because our focus is to look at the various opportunities for collaboration and partnership that would drive the overall growth of the sector. Our key objectives for this summit are: one, gain insights into the future outlook for financial services from a FinTech perspective. Provide better understanding of how FinTechs can help to drive growth, efficiencies, and productivity within the sector. View FinTech presentations from a hand-picked startups to understand how they are delivering new and cutting-edge innovative solutions. Develop an appreciation of some of the key players within the Nigerian FinTech ecosystem. And then also, and most important, network and identify partnerships and collaboration opportunities that we can build on in the future. And finally, articulate recommendations that will accelerate Nigeria's progress to becoming a leading FinTech hub in Africa. Our program today, I believe, promises to be exciting, and we hope that you will take away new insights and deeper appreciation of the immense opportunities that we have in this sector called FinTech. Once again, I'd like to say thank you for your presence here. Thank you for listening, and I hope you take away from here today very significant opportunities from this summit. Thank you very much. So, Olumide, we now come and introduce the next speaker. Thank you.
Thank you, Ayo. I think the next, our first speaker today is Boye Ademola. Boye is a partner and head of our financial service technology at KPMG. Boye will be discussing the topic, digital by value. Can you please join me in welcoming Boye Ademola?
Good morning, ladies and gentlemen. All right, I'm going to spend a few minutes this morning just sharing two major thoughts with you. The first one, I will speak to our own thoughts and perspectives on the FinTech opportunities in Nigeria. And then in the second part of my presentation, I would focus on how we drive value out of fintechs and fintech investments. So the first fintech theme that we believe will shape this market, if we take a 5-year perspective, is blockchain. And a lot of people are asking, what is blockchain? Blockchain essentially is a technology. It has relevance to us, particularly because of its digital currency elements. So there are many digital currencies, and many of us will have heard of Bitcoin, but there are other digital currencies. But essentially what blockchain does and how it relates to Nigeria is in two perspectives. One is because of our diaspora population. Nigeria has the leading diaspora population in Africa. So the estimate is about $21 billion is remitted to Nigeria via Nigerians in diaspora every year, and that's growing. So those remittances, blockchain can influence those remittances, in fact, completely redefine it by ensuring that those transactions are more efficient and the transaction costs come down. The other reason that blockchain is important is because of the challenges we have today with regards to sourcing FX. And so you'll find that people are beginning to look at digital currency in making cross-border payments. So I'm aware of people, for instance, that are paying school fees of their children using Bitcoin. So the first fintech theme that we believe will shape and have an impact on the FS sector in Nigeria over the next 5 years is blockchain. The second one is payments. And we've made significant progress in payments. But the challenge with where we are today in payments is around financial inclusion. Still, we have a huge population that is not financially included. So BVN data suggests now that we're about 50 million people banked, and that's a lot of progress. But we're a population of 170 million people. Estimates again are that you should have over 100 million people, all right, in that former financial system. Our prognosis is going forward, we should see a lot of focus of payments that enable financial inclusion. And if you see what's happened recently with USSD, there is potential, we believe, if you look at that USSD, I call it a quiet revolution that is starting to address this question, or other fintech opportunities. What is important is that, look, the payments, we've been very successful. We've done instant payments, and that's important. Many clients, including the US, are still struggling with this. And we've made progress. But the financial inclusion question is going to be what we're going to focus on cracking, and we believe that over the next 5 years, we'll crack it. The other thing that we'll see on payments is customer experience, payments that enrich customer experience, recurring payments. We believe that these things will define what we're going to see in the next wave of payment solutions. So the second fintech theme that we believe will shape this sector is payments. The third one is insurance. And again, you know, when we talk about financial inclusion, we're talking largely, we talk about the banks and those that are not banked. But if you take an insurance perspective, the data is even worse. The number of people, the penetration of insurance in this market and in our country is quite low. And there's a huge opportunity. There's a huge opportunity to digitize the whole spectrum, the whole process, from onboarding people, premiums, claims, the whole insurance process. So, in fact, if you look at many of the global reports around fintech, there's a sense and a sort of knowing that the opportunity here is even bigger than in banking. And I think that's part of what we're going to try and sort of get into as we go on today. We'll be listening to an insurtech. So FinTechs focused on insurance. We call them insurtechs. So that's insurance. That's the third FinTech theme that we believe will shape our market. The fourth one is retail and micro lending. And when you talk about retail and micro lending, take a look at 50 million people with bank accounts and ask how many of them have loans. It's a minuscule number. And therein lies a big opportunity. And then, again, financial institutions will say, oh, but, we have issues, NPLs, the whole work and all that. Well, that's the digital agenda. How do you do this in a digital way? Take, for instance, the telco. How many of us have heard of airtime vents, lending via airtime? How many of us have heard of that? Okay, many of us don't do that. We have people in the room that you don't need to. In fact, many of us are doing postpaid. But I can tell you there are many, millions of Nigerians that do that. And why do they do that? Because that's lending. Why do they do it? They do it because they need short-term loans. Again, a lot of this is retail and is micro. And we believe there's a big opportunity using analytics, ensuring that the whole spectrum is digitized. The rating, the profiling of the customer, the whole process is digital. We think and we believe that, from our own perspective, there's a significant opportunity here in retail and micro lending. And guess what? What we also see, and these trends are global, is that, look, if the financial institutions will step in, then the fintech businesses will step in. The telcos will step in. And in fact, you will have tech companies, PayPal, Amazon, all sorts getting into the lending space. For us, this is something that we believe in the next 5 years, we're going to see the fintechs make a significant impact on retail and micro lending. The last one is wealth management. So the fifth one, wealth management. And up until now, wealth management in Nigeria has been focused on the HNIs. Some people say it's the ultra HNIs. For good reasons. Because who's going to follow up 1,000 retail people? But that's the wealth management proposition. That process now, it's called robo-advisory. It's completely digitized. And, in fact, if you look at this year alone, the fintechs that have attracted the largest investment, like Glue.com in China, attracted a $1.2 billion investment. Not million. A fintech attracting a $1 billion investment. And what do they do in Glue.com? They do robo-advisory. They do wealth management. So wealth management is going to be really big. So this speaks to the mass affluent, banked but underserved. And we believe that, this is very important. If you look at where we are in terms of our population and the people that are moved into the middle and the upper middle class, this is an opportunity, waiting, for an organization that is bullish enough and sees the opportunity to take it. So we believe these 5 fintech theme areas will shape FS over the next 5 years. I want to share with you something that I think is important. So this speaks to your business case and where you want to pitch as an organization. But in my next section, I want to speak about value. Because again, we're working with clients who are part of this industry, and sometimes we don't always get value out of this investment. There may be some people who are skeptical about this whole fintech play in the room. So I want to speak to where value is, the source of value. And as you look at your fintech play, what are the things that you need to consider? What are the things that you need to keep in mind and keep in view as you make those decisions? The first one The first one is UX UI. And UX UI, by UX UI, we mean user experience and user interface. User experience is extremely important in the digital play. It always strikes a significant blow for the brand. In fact, it's UX that drives user adoption. And user adoption drives advocacy. If you have a solution that people advocate, they do free publicity for you, it addresses your growth agenda, you are well on your way. One of the important things in your fintech play is ensuring that there's sufficient understanding and focus on UX UI. You're building capabilities that allow you to focus on solutions that are attractive, intuitive, simple, consistent, and responsive. Behind this is technology. But look, what the customer sees is the UI. It's the user experience and interface. So the point here is that these things have to happen by design, not by default. The second one is digital enablement. So for you to have fantastic customer experience or user experience, behind it, you have to be digitally enabled. And again, this is where a lot of organizations have lost value. So you make an investment that essentially cannot integrate with your landscape. It's important to know that, look, technology does not exist in isolation. The fintech solutions will not exist in isolation. Even if it's not from a financial service institution, you will find that your fintech solution, even if you're a fintech business, will still require some integration and collaboration in the industry. How many of us will use Uber? How many people? Just let me see a show of hands. Excellent. Google Maps, anyone? Anyone? Excellent. And I want to use this as an example when you're talking about digital enablement. Uber has built $1 billion business, billions of dollars, their market valuation now. But guess what? They do not have a location map service. Uber simply calls another application. The experience is the same. So how can you scale a really small organization and become a global organization? That's the cloud proposition. Cybersecurity is extremely important to digital enablement. Without cybersecurity, there is no trust. In fact, it can bring the whole customer experience to a standstill. And therefore, focusing on security, on identity and access management, on monitoring and response, on zero-day vulnerability is extremely important, and ensuring that as you make your fintech investments, you consider cyber. Resilience is important. Resilience just speaks to your solutions being available all the time, from anywhere. And that's really what you get in the examples I was telling you about. So whether you are out of Nigeria or you are in Nigeria, you can use the solution. The fintech solutions that we speak about must be digitally enabled. You must ask these questions of your organization as you make your play. Am I digitally enabled? Are we going to have integration issues in this journey we're going? And what are we doing to deal those? Another very important value driver when you look at fintechs is an innovation DNA. Innovation is at the heart of the fintech play. And we build organizations that seek to embed a culture of innovation is extremely important. Openness to new ideas, a willingness to collaborate. Like I said, if you have a fintech, say for instance, a fintech is not focused on banks. I don't want to be acquired by a bank. I want to be a fintech business. You still have to collaborate. If you are doing lending, you are interested in getting information from credit registry. You are interested in being connected to BVN at NIBS. So collaboration is extremely important. I question some of the paradigms that we've seen where people want to go alone. In this fintech business, the key is collaboration. At all sorts of fintech companies that are making significant progress, you will find that, look, it's an ecosystem play. It's important to have that innovative mindset and to be open to collaboration. Finally, as I close, one of the opportunities that we see clearly is, look, how can we make Nigeria a global fintech hub? There are today leading hubs from a fintech perspective. If you ask our own perspective in KPMG, we believe we're well on the way. As we planned for the summit, we started looking at fintech investments in Africa, and we found that over the last 2 years, Nigeria led the pack, interestingly. And many times we don't get credit for these things. So the fintechs in Nigeria got over $200 million in investments over the last 2 years, leading the pack, followed by Egypt and then South Africa. This is very important, and it tells us that something has started. The question then is, what do we need to do to land us as a leading destination? I believe there are two things, apart from stakeholders, that there are two players that are extremely important: the regulators and government. And the regulators, particularly to help with enabling regulation. There are certain fintech themes that are seemingly controversial, like blockchain. But really what we need to do as regulators is seek to understand this, is look at what's going on in other climes, and then we'll bring regulation that helps the development of these technologies and fintechs. The other part, or the other stakeholder that I think are really important, is government. You know, government is important. We did also a comparative benchmark and looking at the leading fintech hubs globally: the UK, the US, Israel, Australia, Singapore, Hong Kong. All of them, we found something that was consistent: government incentives, ensuring that there is a plan for the fintechs, understanding that the fintechs, they bring value to society, development to the nation. Incentives like having fintech parks, incentives on infrastructure, incentives in education. And I think what we'll see from a state like Lagos State is that, you know, they're obviously thinking in that line. And we know Lagos is involved recently in Code Lagos, some initiatives. Many of us know about what Lagos is trying to do with Yaba. So that's important for government. And to support the fintechs, they're still fragile. There's a lot of nurturing that is required. But we believe that, look, once the incentives and the regulation are right, we will see significant traction. This will bring significant investments. In closing, I want to say, for instance, if I talk about investments, as we planned this call, we got calls from venture capitalists out of Nigeria saying, look, they wanted to be part of this event. They want to invest in Nigeria. Financial inclusion is big for them. You know, so fintechs do drive investments. And what I think is important is just ensuring that, you know, we're also doing the right things to create an enabling environment. Thank you.
Thank you, Boye. I don't know whether there are any questions. We'll just take one or two questions because of time. Any questions in the house? Okay.
Thank you, Boye. My name is Abdul Fattah Mo, Sterling Bank. I would just like you to throw more light on the blockchain that you talked about.
All right. All right. Thank you, Fatai, for your question. Right after this, we have a blockchain session. So I think, you know, we'll just save that for a fintech to come talk to you on blockchain. All right. Thank you.
So let's just move on. I just want to say a few words before the next speaker comes. London Business School, or London School of Economics, ranked Nigeria as 7th out of 178 countries to adopt the Bitcoin cryptocurrency, which relies on the blockchain technology. And it doesn't surprise me at all, because we've seen the issues with the foreign currency in Nigeria. So it's of no surprise that London School of Economics is saying that we will likely be one of the early adopters of the Bitcoin, which is a digital currency that uses blockchain technology. So our next speaker, Tunde Ladipo, who is the head of partnership at Stellar, which operates Stellar Network, an open source, globally distributed financial platform that connects financial institutions, payment systems, and people. We'll be talking more and just helping us to understand this blockchain technology and how we can easily, you know, start using it. Indeed, some of my clients and a number of corporate organizations are beginning to see how they can adopt this currency in one way or the other to solve their financial or FX problems. So please join me in welcoming Tunde Ladipo to come and talk about blockchain technology. Thank you very much.
Good morning. Yeah, it's good to be back home. I used to work for Otto Anderson and now KPMG. So, Tunde Ladipo, I work for Stellar. I advise Stellar. And Stellar is a not-for-profit. Sorry. Okay. Stellar is a not-for-profit, and it was founded in 2014. And the goal of Stellar is to actually build worldwide financial inclusion and access. We've been asked a number of times, why not-for-profit? Even today, I got the question, why not-for-profit? The key reason for it being not-for-profit is for global adoption. Because if you can imagine the internet is actually owned by a company. Would we all adopt it the way we've adopted it? It's the same thing with the Linux, which is adopted. There's a Linux Foundation which manages Linux. So the idea is to actually have worldwide adoption, amongst other things. Now, I'll be talking about four main things. The first one is payment challenges. I'm sure most people in this room have had a number of payment challenges. Then I'll talk about blockchain. I'll also talk about the Stellar network and also opportunities with the Stellar network. Now, first thing about payment challenges. One specifically, sorry. Someone help? Okay. One specifically is international. All these are the issues we currently have in international payments. So how can this be resolved? That's where blockchain actually comes in. And blockchain, just like Boye had talked about, it's quite revolutionary. And it's quite revolutionary. And there's a lot of interest in it right now. Just looking at the numbers, in terms of investments, in just the last 3 years, 1.4 billion has been invested in blockchain technologies, just the last 3 years. Now, in terms of adoption, about 80% of the global banks have one form of trial or use for blockchain at the moment. We are talking about banks like Barclays Bank, we are talking about Santander, we are talking about US Bank. So all these banks have one form or the other use of blockchain that they are experimenting with right now. And that is supposed to get up to 80% by 2017. Then lots of patents have been filed. Over 2,500 patents have been filed on blockchain in just the last year. And we also spoke about countries. A lot are actually adopting the blockchain technology. The Bank of England is actually looking at it. The Federal Reserve Bank is looking at it. So there's a lot of interest in this space at the moment. What I will do next is to look at some of the terms. Bayo has talked about some of the terms, but I'll just give some more detail. Okay, sorry. I thought you could hear me. Can you hear me? Okay, better. Okay, good. For some reason, I can't hear this. So, in terms of the terms, the first thing is there's what is called a digital ledger. Now, digital ledger is a digital record of who owns what and what transactions are being done. And this is actually distributed. So instead of you to have it in a central location, you actually have it distributed in various nodes. Blockchain is just a type of digital ledger. And what makes blockchain unique is that it records its information in blocks. And these blocks are actually chained together. So if you picture it like an Excel book, so you finish with one Excel sheet, you protect it, then you open up the next Excel sheet, you protect it. So at the end of the day, you have a series of Excel sheets making up a book. So that's one way to look at the blockchain. And the beauty of the blockchain is that you can't actually tamper with the information there. Once it's put in there, you can't actually tamper with it. And how the information is actually put in there is what is called consensus. So all the different people in the network would have to come together and say, okay, we agree with this information for it to actually get into the blockchain. Okay. Sorry, I seem to be having some issues. Okay. Technology sometimes fails you. So, yeah. So, can I get... Okay. Okay. So I think it's fine now. Thank you. So I've talked about some of these terms, the consensus. Those are the rules that allow an update to actually take place. So the different nodes in the network have to come together and agree in order for an update to take place. Then we talked about Bitcoin. Boye mentioned Bitcoin. That's the currency that is used on the network. It doesn't have to be Bitcoin. It can be any other currency. And governments are now looking at it and saying, why can't we also have our own fiat currencies that are digital? There's no reason why they cannot have fiat currencies that are actually digital. So that is being looked at the moment. Now, this is kind of the blockchain. As you can see, you have different nodes there, and you don't need a central body to actually manage things. All the participants in the network can actually contribute and validate a particular transaction. So that's what actually happens. Now, this is how money actually moves in a blockchain. From Bank A, let's use Bank A, it broadcasts onto the blockchain network. And when it's broadcast into the blockchain network, the information is actually put in a block. When it's put in the block, the participants of the network have to actually verify this in the process called consensus. They have to agree that this transaction is actually correct, because you can have transactions that are not correct. Take, for example, somebody wants to make a payment, but he doesn't have money in his account. So clearly that transaction is not going to go, and the participants in the network are going to say, no, this is an invalid transaction. So once that happens, that block is then added to all the other blocks to make that chain, and the Bank B then sees that update and is able to get the credit for the credit that was sent to it. So that's how it happens. Now, there are several applications of blockchain. Boye has mentioned a number of them, but this is a more detailed list of what you can actually use blockchain for. I've talked about the international payment. Trade finance is also a big area where blockchain application is going to be revolutionary. Then also KYC, AML, and a number of other uses of blockchain. Now, talking about Stellar, what makes Stellar unique? Unlike Bitcoin, where the focus is actually on a currency, in Stellar, you actually can use whatever currency you want. You can use Naira, you can use Japan.
Stellar is an open platform that connects banks, payment systems, and people. Both Domestic Bank and Universal Remittance Company have integrated with Stellar, so that you can move money quickly, reliably, and at almost no cost. When Amy sends Tunde $100 through her remittance company's mobile application, fractions of a second, it sends a message to Domestic Bank to make sure Tunde's account is compliant. Then the remittance company, which is an anchor on the Stellar network, meaning that it can accept deposits and issue credits on the Stellar network, deducts the funds from Amy's individual account. Those funds are moved over to Universal's pool account, and then moved on to Stellar by issuing credits for Amy's dollars on the network. Once Universal's credits are inside Stellar, the network searches for the best exchange rate amongst all the market makers on the network. The exchange is complete, and now the Nigerian Naira moved to Domestic Bank's base account. Domestic Bank receives these digital credits for Naira from the Stellar network, and Domestic Bank credits Tunde's personal account. That is how $1 US converts to any of 180 currencies on Stellar, moves in 5 seconds or less, and costs a fraction of a cent. A Stellar integration starts with a conversation between our team and yours. Join these companies who have committed to faster, cheaper, and more secure payments. Contact partners at stellar.org to see how Stellar can help your bank compete in the future.
Okay, so that's a short video that shows how you actually move money on Stellar. Now, other opportunities on Stellar, you've seen this list of selected financial institutions that are connected to Stellar, have integrated with Stellar at the moment. Now, in terms of geography, Stellar is already in 4 continents, and the goal is to actually become a worldwide standard, obviously getting to South America and Australia. That's the only 2 continents that Stellar is not in right now. And there is also a build challenge, which is quite exciting for developers. There's a $3 million prize for people who can build apps on Stellar at the moment. So I think that's it.
Thank you, Tunde Ladipo. We'll be able to take 1 or 2 questions. Anybody with any question for Tunde Ladipo?
Yeah, thanks very much, Tunde. My name is Toyin from Stanbic IBTC Bank. I just want to know, can you give us examples of banks, either in Nigeria or in Africa in general, that's already connected to Stellar? Or even any financial institutions, maybe not banks.
Okay, so thank you for the question. In terms of worldwide, there are banks already connected to Stellar, but in terms of Africa, we are still speaking with a number of banks to connect to Stellar. So worldwide, ICIC is one of the biggest banks in India, is already connected to Stellar, and we're also speaking to a number of banks in the US. In Nigeria, I will not be able to disclose certain names of banks that we've already spoken to, but a number of service providers to banks are already connected to Stellar. And their names came up on the screen, like Flutterwave is one of those names.
We'll just take 1 more question before we move on to the next. She's a thought leader and has extensive experience in digital and customer experience transformation in the financial service industry. BC Lamikora pioneered the African KPMG banking industry customer satisfaction survey. Can you please help me welcome BC Lamikora to the stage? The next, the first panelist for this session will be Ayo Othihiwa. He's a C-level commercial strategy executive in MTN. Ayo has 17 years experience in strategy, marketing, and analytics, including a doctorate-level academic research in the use of advanced analytics to understand consumption behavior. Ayo is the author of Future is Shared, and is currently the Chief Marketing and Strategy Officer of MTN. Please, can you help me welcome Ayo? The next is Mayowa Adebayo. Mayowa Adebayo is a Director, Marketing and Customer Experience in Konga. Mayowa's career spans over 13 years with experience in telecoms, retail, and e-commerce sectors. Prior to joining Konga, she was in charge of customer experience at Etisalat. Can you please help me welcome Maiwa? And the last but not the least is Mujola Oluwa.
In the introduction. The reason why I am taking this session is that customer experience is something we are
we bought a lot of technology.
How do you then,
dailies per seconds. So in terms of network, in terms of capacity, I think we pride
Users truly want, and then how do we build our products or adapt our products to actually suit them? The thing that we do, and Maiwa mentioned on cross-device measurements. This is something that, which is Net Promoter Score, an holistic way of measuring the health of a business, which is what is called customer effort score, which helps us to know whether we are putting too much effort on our customers in trying to interact with us, even if it's just buying or trying to get the items delivered. We measure what is called cost index, because for us, the only product we sell on Konga is our platform. And we have over 60,000 sellers. So for us, trust is actually really key. How do we begin to really understand trust from our customer view? When it comes to every measurement, from our customer standpoint, customers are always changing. Like we've all been able to establish, they're always changing. So it could be this that is important to me. Tomorrow, payment option. So we are just ratifying from our customer. What are the elements that is done to you across your cycle? And those are the things we focus on.
because we're a percentage business, in as much as PS, customer effort score, scale up to 2 critical measures, I think might be important from a fintech perspective. First, customer relevance score. To what degree am I relevant?
They are very non-conforming, so they're able to come up with real solutions to help even the next generation that we don't even, or the classification that we don't know about.
Perspective, from a telco perspective, I think I would like to start from the buy. I can share with my friend, and my friend will know that I'm them. So those are the thinking. Thank you.
Okay. Thank you very much. I think this has been extremely interesting. And the one takeaway I take away from this is what you're saying is we're all millennials in the way we think, in the way we react, whether we accept it or not. But it is true that they major influence on everything. So just one last question, and then we'll throw it open for questions and answers. But as you talk about it, and I think one thing that I'm a bit curious about is we've talked about this millennials defining, in a sense, the experience for the generations before them, and in a sense maybe defining, as you say, for the future. How do you then, you've touched on it, but I would want you to talk about how do you still ensure this personalization, customer delivery? How do you still price service? Especially given that, if I take from an MTN perspective, you're sitting on loads of data. How do you bring that together and say, that next product for BC, this is the next product for BC, this is the next product for Maiwa, this is the next product for Jola? Bayo.
Okay, thank you. I think over time we've come to realize that customers are not average. Any business that runs on average is not a business. Customers are a bunch of emotions, and those emotions contextualize at different times. As a business, we move from macro segmentation, beyond micro, beyond nano, to what we call one customer segmentation, where we see you as an individual. So as a business, we have over 1 billion, even though we have, the statistics of our customer, close to about 60 million. So what does that mean? Even for that single customer, there's a way he behaves in the morning, different from the way he behaves when he's with his friend, different from when he behaves in the night, or when he's going out and all that. So even a single customer has multiple context segmentation from a behavioral and attitudinal perspective. So that has become our basis to say, let that be the basis for developing solutions or proposition. Personalizing to the degree that we know that customers, this is their mind state, this is their need state, mind state, need state, and context state. So it's the integration, it's 3 variables that's allowed us to say this is perhaps the most appropriate experience for the customer. There are certain propositions we're not going to give you in the morning. We'll make sure that it's in the afternoon, even though you are perfectly fit for it. And I believe that even from a fintech perspective, it becomes even more important to understand context, in our personalization. I'll use a very example. When I use my banking service, I get an SMS, and it's the same flat SMS that I get. Nobody has taken time to understand that this credit card payment I just made, I made it in Dubai. The SMS you sent to me, can it reflect the fact that I'm having fun here? Can you excite me with the SMS? You just withdrew X dirham from your account, a great time. Different from when I use the same card to pay for a bill in the hospital. That is what is called personalization. Ability to make sure that every engagement with the customer speaks to the fact that we understand your mind state, your need state, and your context state.
John, I can see it.
Yeah, so I just completely agree with him. In Google, we summarize all that into what we call moments. And those are moments for us where people reflectively turn to a device to either to know something, to buy something, to do something, to go somewhere, etc. So, as I said, you're turning to your device to look at your SMS, to say, oh, I got an SMS, whatever. And at that moment, you're enjoying. Your context is really that I'm enjoying in Dubai. I just withdrew my 1,000 dirhams or whatever. So you should tell me, have a nice day, have a blast in Dubai. So that's the context. So in that moment that you need to know, or you need to buy, or you need to do, how are you really communicating with customers? So an example of that as well is how we build that into our products is, for instance, Google Now. So on Google Now, for instance, think about someone. My context is I'm traveling to Abuja, and my flight has been delayed for 2 hours. And because
it does. And I think the other point that I found very interesting was just the talk around the personalization and how you actually look at it from the micro minutes, the micro customer. And it talks to, I think what we are beginning to see as KPMG, that customer segmentation only exists at the individual level. That's where there's customer segmentation. There's no class of customers anymore. The segmentation has to talk to the individual customer, and the only way you can do that is you use the data you have to be able to drive that personalization and drive that. And Bayo, as you said, is the next P. What's the next product? So, and that's so important because you raise the bar before the customer gets there. So thank you very much for taking time for joining us today. Thank you for sharing your individual experiences, which I think has made this quite a rich discussion.
Thanks for having us. We had a great time.
I'm truly honoured to join you here today in Lagos. I'm going to be talking a lot about FinTech and how banks and insurers collaborate with FinTech. We get slides going. I said I do FinTech, I don't do technology. Come on. Can you move the slide forward one? Or bring me another clicker. Right. Okay, talk amongst yourselves for a minute. I could tell jokes if I was any good at this stage, but I don't really know any. Ooh. Thinking about my insurance company. And in fact, for all of those things I did over that weekend, I had no interaction with them at all. So here's the challenge. Banks and insurers are becoming increasingly irrelevant to our everyday lives. And how do you respond to that if you're a bank or insurer? It's only going to get more and more challenging. I'll tell you more about my weekend later and how I was able to do that. So, this is why the chairman of BBVA said that half of the world's banks are effectively going to disappear because of digital disruption. There are 20,000 FinTechs around.
Okay, number 57. Now for decaf cappuccino, please. You have to pop you on hold while I transfer you to the coffee department.
Hi there, how can I help?
She said she's put me through to the coffee department. I don't quite get
Coffee department, sorry, you got through to the lager department. Give me a minute.
Huh?
Would you like to make an application for some food or drink?
For service, and it was bad, you wouldn't go back. It looked terrible, and I thought I'd never come back again.
Thank you for your custom today. Would you mind taking a short survey? Your feedback is so important to us.
There you go. So there are 40 new digital banks that are starting up in the UK alone. And many of them have a strong belief that where financial services is today doesn't have the right velocity. Velocity geolocates where you are.
Wake up.
Hey, Eva.
Good morning. Sleep well?
Not bad, thanks. Could do with another hour. So I'm going out with Grant tonight. Dinner and drinks. Could be a late one.
Don't forget, the last train is at 10:45. You've been spending a lot on taxes lately.
Message received.
John, it's your dad's birthday next week. Would you like me to pick a few gift ideas to choose from?
Yeah, thanks. Something nice. Leather-bound. You know the sort of thing he likes. I was thinking about 150, 200.
Perfect.
I see copper took a bit of a battering overnight.
Yes. Oil rose 0.5%, so I rebalanced your portfolio. I'll reassess when the market's open.
Maybe keep an eye on gold too.
I'm on it.
Oh, Eva, I got a message from Kate in HR. Something to do with pensions?
Already taken care of, John. I've increased your monthly contributions by 3% and transferred £10,000 from your ISA.
Great, thanks. Is there any way I can make more of my investments?
My projections suggest you could improve your...
Sorry, Eva, gotta run. I'll catch up with you on the train.
Okay, John. Transferring now.
So how many people did the bank in that video? Anyone? No, and that's the point. So as we wind forward 5 or 10 years or 15 years in the future, we interact with a single digital assistant, which helps us manage many different parts of our life, whether that's shopping, whether that's managing our diary, turning on the kettle, or doing our banking. Okay, and if you new platform layer emerges, then you end up with something which I coined the invisible bank. Okay, so beneath that you get a layer of support, a product layer with a savings product or a money management product or a wealth product that plugs into that overall platform layer. And there's a real role for banks to play in that layer, for sure. But in my view, the most likely contenders for the platform layer, the front end of the customer, is going to be Amazon, Google, Facebook, Alibaba, the big tech giants. And if you believe this kind of future might be true, then what does that mean for your strategy as a bank? Well, it means start driving cost out of the business, connected devices, do your shopping, manage your diary. There are all sorts of things you can already do. If you look at some of the banks in Europe, you can already make a payment using Siri. You just press your phone, send £10 to Warren, and £10 will be on its way. It's as simple as that. There's a real chance that this stuff will be here much sooner than we believe. Rate is at the time you're wearing it. It's going to be able to authenticate you biometrics, because we each have a unique heart signature pattern. And if you pull together all of that data, you can probably have a good guess as to what people are doing. How do you commercialize that for the benefit of the customer? It's going to be a really big thing. I've got there a butterfly, something called the butterfly effect, and this is the big data piece. Okay, if you take data analytics today, we can already trace third or fourth order impacts. So there's a fintech that I know and I've worked with that can trace when outbreaks of tropical diseases happen in Central America, the impact that has on seasonal workers harvesting cocoa crops. And they can trace that then to what happens to cocoa prices. And they can trace that then to what happens to the Nestlé stock price. If we're in a world where you can do that, one day, eventually, we may be able to get all the way back to the butterfly that flapped its wings. And in 2030, if you look forward to a front door, okay, what can you tell about the person that lives in the house from the front door? Does this front door tell you that they are of good credit quality or not? Does it tell you something about their wealth? And not just the front door, but what about the state of the house overall? What about if there's a car on the drive? What about if the lights are on at certain points of day? When Amazon start making deliveries via drones, they'll be capturing this sort of information. And if it is proven that some of this indicates creditworthiness, that's a huge implication for banks that don't have that data. One of my clients is involved in consumer credit. And they are already, what they do is they basically give you a product that you pay for in installments. At the moment, they've got manual delivery drivers, not drones, but they take notes on the quality of the decoration of the house in order to test in the future whether it's got any indication of credit risk. So this is happening already. So let me talk about some of the key trends in fintech. We heard a little bit about personalization before, okay, but in 5 or 10 years' time, when we log into our mobile banking application or into our platform like Eva, it will be completely personalized to us. Many of my banking clients already have personalization of their landing screens. So the stuff that we were talking about in the panel before, that's already there today in many banks around the world. Artificial intelligence. Again, one of the core underpinning technologies of Eva, RBS has announced recently that they're starting to use artificial intelligence to service basic customer needs. Another of my banking clients has artificial intelligence installed in their back office so that they've been able to take out significant numbers of people from HR and from IT. So when you do, when your computer breaks down and you phone up the IT helpline and they say, have you repowered your machine? Have you turned it on? Have you turned it off? All those basic support functions, those are all being done by AI now in one bank. We covered blockchain before, so I'm not going to go on to it. But another big area of focus for many now is around RegTech. This is around how technology can take risk out of banks and insurance companies. So trading activities, this is a big area for that, but also a big area to take fraud out of. So again, one of my clients is using a fintech to help them monitor the emotional quality of someone's voice when they phone the call center. And if they detect stress, either in the customer or in the customer service agents, they immediately get a supervisor to go in and take over the call. It's massively improving customer service, but it's also taking risk out of those phone calls, the risk of mis-selling, the risk of bad advice. InsurTech is another huge area. We talked about the tech giants before. We didn't really mention Alibaba. Alibaba, it has more customers, and Alipay, the financial services arm, 10 times more customers in China than HSBC has. They have the third biggest, don't panic, but don't panic quite yet. They have the third biggest money market fund, and they've partnered with Ping An, one of the insurers there, to create Zhong'an. Zhong'an, it was established just 3 years ago and has written 600 million insurance policies in 3 years from a standing start. It is staggering. The final big trend I want to talk about is the Internet of Things. So we all know about connected devices, but what's going to be really exciting is when those connected devices start really operating each other. So when your car goes to refuel itself at the station without you, how does that payment happen? Right? So inanimate objects to inanimate objects making payments to each other. Again, you have to have a strategy for dealing with that. It might only be 5 years away. So now's the point where I say don't panic. Because although it feels like all of this is quite negative towards the banks have a huge opportunity here. Because the banks have millions and millions and millions of very loyal customers. They're very good at managing risk. They're very good at keeping the customer's money safe, and they are trusted for doing that. So they have a big advantage, and the question is, how do you capitalize on that advantage? There, don't panic. So, if you trace the evolution of partnerships, some examples here, in particular, Fidor is a good example of that, and talk about wanting real improvement in customer service through platform-based models. Fidor has a charge if you use your debit card. It's 25 cents or something like that. It's mainly a European-based bank. And one of their customers put on the Fidor chat website that actually, if you went in and got cash back at a supermarket, you could avoid the charge. Now, most banks would be horrified by that and kind of remove that because they want to protect their revenue streams. What Fidor did was they promoted that tweet. They put it on Twitter, they promoted it, and they gave the individual a reward for customers to help themselves. It's a genuine mind shift. So we talked about these platform-based businesses. Some examples here. BBVA have recruited someone to be the head of open APIs. RBS have launched an open bank. This is genuinely the next wave of banking. So I didn't want to come to Nigeria. I've been here 12 hours, I think, maybe a bit more now, for 14 hours. So what I know about Nigeria, I could write on a postcard. But I didn't want to come here without talking about financial inclusion, because FinTech is a huge opportunity for financial inclusion, not just in Nigeria and India and China and other places I've spent more time, but also in developed markets. There are at least 3 million people in the UK without a bank account, and FinTech is genuinely helping them access financial services. About 3/4 of the world's population are financially excluded. And actually, there's a huge issue with this in the US as well, with Mexican and other immigrants. So it's genuinely a global issue. And of course, FinTech drives down the unit cost of doing business. So I already talked about TransferWise and being 8 times cheaper. But there are estimates out there that talk about mobile and digital banking costing 1/10 of the cost of traditional bricks and mortar banking.